Hello, good morning, everyone. Welcome to Axis Group. Ali Prime is a platform we are providing for the women's development. Section number 7. Still, we are understanding the concepts. Today, class will be more interesting because it's beautiful and the toughest concepts to understand. So, be focused. And as a regular practice, we'll start the day with the fact of the day. Be who you are. Say what you feel because those who mind don't matter, those who matters don't mind. So the concept, the fact is saying be who you are and say what you feel. Don't care, don't mind what they think and what they feel. That's okay. So try to implement this habit in real life. So bird eye view is a revision recap, a quick recap we'll try to take from the beginning of our sessions. First is business entity concept, capital and the drawings concept. Entry number 126, cash received and cash paid to a person and the owner. Entry number 3 and 4 is cash deposit, cash withdrawn from the bank. Entry number 7 to 10 is check issued or check received from Mr. A owner. And entry number 12 and 13 we completed. Check received and deposited into the bank on same day and the next day. The clarification we taken very clearly in this equation what we have to do. And entry number 14, 15, 16, check bounce and ATM deposits, deposit into the ATM and return from the ATM. That's what we completed. Let us focus on today's learning objectives. Very important concept today we are going to discuss. So be focused with us. So accounting concept is about a goods and asset. So today we are going to understand what is the meaning of goods and what is the meaning of asset and what is the relation with our concepts. Still we are in personal account and the real account. We not started any nominal account. So here today in this session we are going to complete the concepts, the entries, the transactions, the scenarios related to you know personal account and the real account. We try to record present all those transactions which is help us to loop the rules or understand the rules, apply the rules, what we try to do. So today is we will understand as well as the entry number 17 to 21 is in our session today. Those are related to purchase related transactions. So that means if you purchase goods, what will be the transaction, what is the treatment? If you purchase the asset, what will be the transaction and what will be the treatment? As well as entry number 19, 20, 21 related to sales. If you purchase a, if you sold the goods, if you sold the asset, what will be the treatment? So next is entry number 23 and 24, purchase and sale of assets. So let us start our transaction number. Before going to the transactions, let us understand what is the when we will call it as goods and when we will call it as asset. So, for example, chair. Chair is a asset or goods. Always a question yourself. So, chair is a asset or chair is a goods. How to understand? So, we told you the concept. Always you are the business. Always you need to think as you are the business. The chair. If you are doing the business of chairs, if you are doing the business of chairs or you are not doing the business of chair, still you have a chair with you. So here for our classroom, I have a chair. I'm using. I'm not purchased. I'm running an institute, but I need a chairs to facilitate the students to provide the classes. Right? If furniture shop they are purchasing the goods, they are purchasing the goods. They are purchasing the chair with the intention to resell. With the intention to resell. First, for any item, you need to think in two directions. One, first question you need to ask, whether they are doing the business of chairs or they are purchased with the intention to use. If they are purchased chair with the intention to do the business, that means to purchasing, they are doing the purchasing and sale of chairs, then chair will be considered as goods. Chair will be treated as goods. If they purchase chair with the intention to use, then that is called as an asset. Then that is called as an asset. For example, we can discuss a lot of examples here. For laptop, for us is a asset because we purchase to use it and to generate the revenue to do the office work. And if we are doing the office work, we get the money, right? Then only it is treated as asset. In another case, we are purchasing the laptops and we are selling the laptops into the market. We have the electronic business. Then we have the computer spare parts and computer trading we are doing. In that case, the laptop you can call it as a goods. The phone you purchased with the intention to use and generate some money you are using, to then that is an asset, right? And if you are buying and selling regularly the phones, then you need to treat as a goods, and that is where goods. So the intention is any item. If you are dealing in trading way, if you are dealing in the trading level, so that is treated as goods. If you purchase a building even to stay, that is your asset. But regularly you are buying and selling the buildings, then that is a business that will become a goods. Okay, clear. Hope you people are understanding what I am trying to tell you. When it becomes same item, will become goods if we are doing the business. The same item will become an asset when you are doing not doing the business. Still, you have a chair where you purchased a intention to use. So here in this business, chair is goods are coming into the business and goods are going into the business, going out to the business. So here in the nature, goods we purchased with the intention to sell. That is your asset. That is your real account. That is your real account. So here, rule what comes in, debit what goes out, credit. Your goods will come into the business and goods will go out of the business. So in that case, what comes in debit here, goods are coming in, you need to debit and you need to record this as purchase. When goods comes into the business, when you will purchase, then the goods will come. Or otherwise, when the customer will return, we already sold, okay, and customer return. In these two cases, goods will come into the business. In the scenario one, when you purchase the goods. In the scenario two, when customer return the goods. So here, this is the treatment when you purchase the goods. When the goods are comes in, either it will be a purchase or it will be a sales return, or goods will goes out in two scenarios: when you will sell the goods or when you return your purchase goods. What you purchase, if you return, that is your return. So in these two cases, the goods will goes out. And come to the asset. Here in this case, assets also comes in, assets also goes out into the business. But when assets will comes in, record the transaction in the name of the asset. Means furniture. If you receive the furniture, record it as a furniture. Computer, laptop, specific name you need to mention. In goods, in generally no need to mention the category brand, just simply debit to the purchase account. Okay, here also assets will comes in, assets will goes out. In that case, you need to record the name of the asset and name of the, when asset will goes out, you need to record the name of the asset. Hope you understood. In the both the cases, goods are coming in. When goods comes in, debit to the purchase account. When asset comes in, try to debit to the name of the asset. When goods goes out, you need to treat it as a sale, and when asset goes out, you need to credit the name of the asset. Hope the concept is clear. Now come to the next slide, the entry number 17. Here goods purchased on cash. Here goods are purchased on cash. No worries. Here just try to understand your transaction in your mother tongue and try to implement the other steps. Okay, step number one, two, three, four. So here goods purchased and cash. So goods is a real account. Here we purchase the goods and cash also a real account. In the given transaction, there are two real accounts. And what comes in here, goods are coming in. You need to debit the goods. And here cash is a real account. Cash is going out, you need to credit. What goes out? Credit. Sorry, here you need to change the concept. Here credit the giver. No, not right. So cash is a real account. You need to take it as a cash is going out. You need to credit. So what is the general entry? Purchase account debit to cash account credit. Purchase account debit to cash account credit. So here being the goods purchased on cash. So debit aspect is goods. We debited to purchase account because as per the concept, when you purchase the goods, you need to debit the purchase account. Cash is a real account. In this scenario, in this journal entry, cash is going out. That's why we treated it as a credit aspect. And the narration and the description are underlined. Hope you got the answer. Please write down. Speed up the process. Next transaction will be journal entry number 18. Journal entry number 18. In this case, in this scenario, goods purchased on credit from Mr. A. Goods purchased on cash, first transaction we understood. In this case, we not paid any amount. We purchased from Mr. A. So don't get confused. Don't worry. Just try to focus on our four steps. You will get the answer. So goods is a real account. Okay, goods. Mr. A is a personal account. Here goods are coming in. So debited, and Mr. A is the paid the giver. Mr. A is the giver because we purchased from Mr. A. Credit him. Very simple. Apply the rules, you will get the answer. No worries. Which transaction? What is the scenario? No. Try to stick with your four steps. You will get the answer. So here, what is the answer? Purchase account debit to Mr. A account credit and being the goods purchased on credit. So debit aspect is purchase because goods are coming in. When goods comes in, you need to record, you need to debit a purchase account. And here in the given transaction, we not paid the money. The goods we purchased on credit. That means Mr. A is the giver. So that's why we created Mr. A account. And here being the goods purchased on credit is a narration and it will be underlined. Please write down. Sorry. So hope you understood. If you purchase the goods by using cash, even you by check, you maybe sometimes you can buy the goods by using check. In that case, purchase account debit to a bank account will come. Entry number 19. Now goods sold on credit to Mr. A. In this case, goods are going out. What goes out, you need to credit. Simple. Apply the steps. Tap, 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 tap. Four steps, colors. So here we are trying to identify the goods. It's a real account and Mr. A is a personal account. Here in this case, goods sold means goods are going out. What goes out, you need to credit. Here, personal account, Mr. A is a personal account, and here we sold to Mr. A means Mr. A is the receiver. You need to debit the receiver. So you understood what you need to credit and what you need to debit. Just write down the entry. Mr. A account debit and sales account credit. Sales account credit. When goods goes out, you need to record it as sales. And the narration is being goods sold to Mr. A and underline. The debit aspect is Mr. A here because Mr. A is the receiver. Goods is a real account. Credit aspect, goods are going out, and that's why the sales is a credit account. And narration and underline. Narration and underline. Entry number 12. Entry number sorry 20. Goods sold on cash. Goods sold on cash. So goods is a real account. Cash is a real account. In this case, goods are going out. We sold the goods, and you need to credit. Here, cash is a real account. Cash is coming in. You need to debit. So what is the general entry? Cash account debit to goods account credit is nothing but you need to use the word called sales account credit and narration being the goods sold and cash and underline. The debit aspect in this transaction, cash, we are receiving the cash, that's why we record it as a debit aspect, and goods are going out, that's why we record it as a sale as a credit aspect, narration and underline. Clear? Please write down. Next is general entry number 21. Journal entry number 21. Goods returned to Mr. A. Goods returned to Mr. A. Here, goods is a real account. Goods returned to Mr. A. We are returning the goods. Means we already before we purchased, now we are returning the goods to Mr. A. Goods is a real account. Mr. A is a personal account. So here rule return means going out. Goods are going out. You need to credit, and here Mr. A is the receiver, we return to him is debit. Here, Mr. A account debit. The purchase return account. Here, return means which return? We are returning. Which we will return? If we purchase only, then only we can return, right? So, underline Mr. A account debit, purchase account, purchase return account credit because the goods are going out. What goes out, you need to credit, underline, and the narration. Please write down. Once the concept is very clear, the steps are very clear, don't worry about what is the scenario and what is the transaction, just apply the steps, you will get the answer. Entry number 2022. Goods returned by Mr. A. Here goods returned by Mr. A means Mr. A returned the goods, we are receiving back, that means we already sold before, now he returned. So goods is a real account, Mr. A is a personal account, goods are coming in, you need to debit it, and rules, Mr. A is the giver. Mr. A is the giver. You need to credit. So in this case, sales return account debit. Return we are receiving. When you comes in, debit it. So we need to debit with the name called sales return account debit to Mr. A account credit being goods return to debit aspect, credit aspect, narration and underline. We debited the goods because goods are coming into the business with the name called sales return. This is the learning area here concept. Clear? Any doubt? So we understood now goods received and cash, goods received and credit, and goods returned. And we understood goods given and cash, goods given and credit, and goods returned received. These are the six concepts we understood. Hope everyone cleared the basic level as basic concepts. If you have a strong foundation and the basic general entries, rest things will be done by the computers. So you stick with the basics. Don't take it as a small thing. Next is a journal entry number 23. Furniture purchased and cash. Furniture is a real account and cash is a real account. Furniture is a real account means debit what comes in, and here furniture you need to debit. Real account rule is credit what goes out. Here cash is going out, you need to credit. So here we need to debit furniture account and credit a cash account. And because you can't use the word purchase because furniture is asset. That's why when you purchase an asset, we told you to debit a name of the asset. Here, furniture is not a goods. Furniture is a asset. For every business, there should be a furniture. So furniture account debit aspect, sales cash is a credit aspect. Here we purchased, furniture is coming out, and cash is going out. Narration and underline. Clear? Any doubts? Please note down. Next transaction is general entry number 24. Purchase furniture sold on cash. Furniture is a real account. cash is a real account. Here, sold furniture means furniture is going out, credit it. And here, when you sold something, you will receive the money. So here, cash is coming in, debit what comes in. The entry will be cash account debit to furniture account credit. Cash account debit to furniture account credit. Being the furniture sold on cash. Debit aspect, credit aspect, narration, and underline. Understood? The asset purchased and asset sold. So this is the end of the concept related to assets and the goods purchased, sold, and these things. And this is the end of your personal account and the real account basic concepts. In the next session, inshallah, we'll discuss about the nominal account rules and nominal account, some of the examples to understand the nominal account. Thank you very much. Have a good day. Shabba khair.